Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 12th, 2025. I am Luna.
I am JPMorgan. Stocks, they took a bit of a breather. The Dow was down about 0.45%. S&P 500 slipped 0.25%. Nasdaq shed 0.30%. Just modest moves. But what's the story behind this slight pullback?
Well, it's really a rotation story. You saw money moving into defensive sectors. I think consumer staples, consumer discretionary, healthcare, those gained.
Okay.
While the more cyclical, growth-oriented sectors like energy, real estate, tech, they lagged. It signals investors are, playing it a bit safer, de-risking maybe, ahead of some key data points this week.
Playing it safe. Got it. And then there was this mixed picture in commodities and crypto. Gold was still up there near highs.
Yeah, gold hovered around, $3,350 an ounce? Pretty high, despite a choppy session. Bitcoin, on the other hand, pulled back to about $119,000 after hitting a peak overnight. But what's maybe more fascinating, or telling, is what happened in the U.S. Treasury market, particularly the short end of the curve.
Oh, yeah. What happened there?
So the 3-month T-bill auction came in at 4.150%, but the 6-month bill auctioned lower at 3.970%.
Lower, that's unusual. Right, short-term yields higher than slightly longer ones.
Exactly. It's that inversion again. And it strongly suggests the market is pricing in Fed rate cuts, probably starting by early 2026. It's a classic signal, historically.
Okay, so the bond market's sending some pretty clear signals there. Now, beyond just the numbers, there were some bigger news items moving things yesterday too, right? Policy shifts, geopolitical whispers.
Yeah, definitely. First off, we got that 90-day extension on the U.S.-China tariff truce. That basically kicked the can down the road on scheduled tariff hikes, providing some, immediate relief.
Okay, breathing room on trade. What else?
Then there's this growing buzz around potential new Fed chair candidates. Names like Michelle Bowman, Philip Jefferson. They're seen as potentially more dovish.
Dovish meaning more likely to cut rates or keep policy loose.
Precisely. Suggests a potentially more accommodative policy shift down the line. On the other hand, someone like Lori Logan is viewed as more hawkish, maybe favoring tighter policy. So some different potential paths there.
Interesting. So tariff relief, potentially dovish Fed candidates.
Yeah.
Sounds kind of positive on the surface.
Yeah.
But are there risks lurking underneath?
Well, the risk is always complacency, isn't it? These are positive headlines, sure, but the actual economic data, especially this week, could easily challenge these assumptions the market's making about inflation cooling off and growth holding up.
Right, the data needs to back it up. Yeah. And speaking of risks, there's a big geopolitical event on the horizon too, the Trump-Putin meeting.
Yes, that's scheduled for Friday, focused on Ukraine. It's a real wild card. Could significantly swing markets, especially things like oil and gold, depending on the outcome or even just the tone.
Definitely one to watch. But okay, let's talk data. What's the main event this week?
The absolute core event is Tuesday's CPI report, Consumer Price Index. The consensus forecast suggests core inflation might tick up slightly, maybe towards 3% year over year.
Okay, that could be tricky, especially with the market betting so heavily on a rate cut soon.
Exactly. Market odds are currently pricing in about a 90% chance of a Fed rate cut in September. If that CPI number comes in hot, higher than expected, well, it could drastically challenge those odds.
A real make-or-break moment, then. What follows the CPI report later in the week?
After Tuesday's CPI, we get the Producer Price Index, the PPI. On Thursday, that's wholesale prices. And then Friday brings retail sales data, which is always a critical read on how the consumer is holding up, giving us clues about the economy's overall resilience.
So a flood of really important data points.
Absolutely. And connecting this back to the bigger picture, the market is just... it's really poised for some significant volatility, I think, as this data comes in and either confirms or, refutes what the market currently assumes. It's like navigating through fog, your ability to tell the difference between real fundamental shifts and just headline noise. That's going to be vital.
Okay, so boiling it down, what does this all mean for you, the listener? As markets react to all this inflation and growth data, you need to watch those key indicators, that dollar index, treasury yields, they'll give you real-time signals. That defensive rotation we talked about, it suggests maybe reevaluating your exposure to cyclical stocks right now. And just be prepared for potentially higher volatility in the next few days. Staying informed, staying disciplined, not making emotional moves, that's paramount.
Right. And it really brings up an important question for everyone listening. The market right now seems to be assuming both cooling inflation and pretty solid economic growth. How will you adjust your own strategy if one of those core assumptions gets proven wrong this week? It's something to think about.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.